Bitcoin is on the rise yet again, as well as several other emerging competitors in the cryptocurrency industry. But what brought about this price surge in recent weeks? For today's video, we'll be looking at some of the factors that contributed to the steady rise of cryptos, as well as what these rise in market prices entail. So let's get into it. BTC on the rise after suffering from a stagnant period in recent weeks. The most popular and highest priced crypto in the market, Bitcoin BTC, is finally seeing a rise in market value after being stagnant for quite a while. It was sitting comfortably at the $42,000 mark and has experienced a sudden increase in the recent weeks, which is very tempting for buyers and investors. In April of this year, BTC reached a record high of $64,000, but then, like all other cryptos, it fluctuated and has been stagnant for quite a while. The current market price for BTC is $49,841, and it continues to rise with every passing moment, apart from suffering common fluctuations. But it isn't the only crypto that's seen a rise in market price, since Ethereum, the second highest crypto, has also seen significant gains, which rose over 6% and nearly 15% in late August. And just this early September, Cardano, ADA, Hex, and Solana also experienced record highs lately thanks to a recent crypto bull run, with Cardano finally reaching above $3 for the first time ever and is now pushing forth towards a $100 billion market cap. On the other hand, Solana is almost on par with Dogecoin in terms of overall value, according to a CoinMarketCap's report last September 2nd, 2021. So what does this mean for buyers and traders? With the rise in BTC's market price, it's only natural that the majority of crypto prices also increase, since they're all directly tied to BTC's performance. Many are using this opportunity to invest in stocks in the hopes to gain more in the future. Twitter quickly makes a move to make crypto the native currency of the internet. Social media platform Twitter has been making headline news recently, since it's been reported it has plans on adding the ability to tip others users via Bitcoin. As of late, a leaked image of what this service will look like has been making rounds in social media, which was developed by Alessandro Paluzzi, a renowned mobile developer. The tipping service is believed to make use of the Bitcoin Lightning Network that enables quick and cheap transactions through a Layer 2 protocol. This news doesn't even come as a shock for many, since Twitter's current head, Jack Dorsey, has already stated the BTC was to become the native currency of the internet. In an announcement made in late August this year, Dorsey detailed his plans on what to do with his mysterious BTC startup named TBD, and they'd also slated that they'll be working on a decentralized exchange that will democratize access to crypto. Dorsey took his announcements to Twitter, where he wrote, "We've determined TBD's direction. Help us build an open platform to create a decentralized exchange for Bitcoin." MicroStrategy joins the BTC bandwagon. Experts in analysis have been claiming that BTC may reach a new all-time high this year, hence a lot are quick to make strong purchases. Best said by Alexandra Clark of Global Block, support is nearly according to technical charts. Clark works as a sales trader in the UK-based asset broker and shared what she thought on the rise of BTC. She continued, "Bitcoin's simple and exponential moving averages give strong buy signals. Not only that, but MicroStrategy continues to grow its Bitcoin portfolio. This support could stabilize the pullback and maintain the breakout move above $45,000. Daniela Hathorn of DailyFX, a foreign exchange firm, also thinks that the sudden rise in BTC prices isn't in any trouble as long as Bitcoin stays above its 200-day moving average at 45,750. Looking ahead, the key challenge for buyers will be to cement further gains towards $55,000 without losing momentum along the way, Hathorn added. Aside from Twitter, software firm MicroStrategy also acquired an additional 3,907 Bitcoins as of late, which roughly brings their BTC count to 100,000, which roughly translates to $3 billion in today's rates. The company's CEO, Michael Saylor, is one of the firm supporters of the popular crypto and has been busy investing in Bitcoin in the past year. MicroStrategy's latest acquisition was part of the crypto's purchase by the whales between late June to late August this year. That's worth $10 billion according to data gathered by Chainalysis. Dorsey's tweet was further elaborated by TBD at Square's general manager Mike Brock, who tweeted a series of accompanying explanations to what their plans are. "There's been a lot of speculations about what TBD is and isn't," Brock wrote. We believe Bitcoin will be the native currency of the internet. While there are many projects to help make the internet more decentralized, our focus is solely on a sound global monetary system for all. In addition to that, Brock also highlighted the biggest problems with crypto exchange services such as Coinbase and Cash App, wherein he explained that these platforms are subject to restrictions and regulations for users in different countries around the world. This is the problem we're going to solve. Make it easy to fund a non-custodial wallet anywhere in the world through a platform to build on and off ramps into Bitcoin, he further added. You can think about this as a decentralized exchange for fiat. Brock also gave the assurance that the platform will be developed in public, stating that it's open source, open protocol, and any wallet will be able to use. To wrap up his statement, Brock concluded by saying no foundation or governance model that TBD controls, permissionless or bust. We'd love for this to be Bitcoin native, top to bottom. Several analysts also warn investors not to make drastic purchases. As much as a lot of other market researchers and analysts express their approval for the rise in stock market prices, there's equally a lot of others who voice their concerns and remind people of the volatility of the crypto market. Just because it's doing well in recent weeks doesn't mean that it's guaranteed to last forever, since the probability of Bitcoin's price to witness a decline is likely, considering how it's still on an upward trend nowadays. Experts have continuously reminded investors and the public since day one of the volatility of cryptocurrency. That's why they also recommend diversifying your assets and to keep your crypto investments in less than 5% of your overall portfolio. Humphrey Yang, the finance expert responsible for Humphrey Talks, has given his thoughts on the matter in an interview with Next Advisor. I know these things are super volatile, like some days they go down 80%, Yang told Next Advisor, but if you believe in the long-term potential of Bitcoin, just don't check on it. That's the best thing you can do. Admittedly, a lot of us are into crypto in the hopes of earning a lot more than we put out, be it in the short or long run. But there's a large percentage of crypto users who are in it as part of their retirement plan. Still, it's tempting to invest in what's on the rise these days, to which Tori Dunlap of her first 100K has something to say. Follow the 5% rule, which is don't contribute more than 5% of your portfolio to risky assets such as crypto. I think it's really important to consider these things are still speculative, Dunlap expressed, who's known for saving her first $100,000 by age 25, is on track to have $6 million saved by the time she retires. If you're investing a certain amount of money, you should maybe be okay losing that amount of money. Enticing as may be, there's a strong probability that the time will come when certain regulating rules and implementations will be put in accordance globally, since crypto has been on the rise. Dave Abner, who's the head of popular crypto exchange Gemini, has described earlier this year as the breakthrough for cryptocurrency. There's tremendous focus and attention being paid to the crypto industry. While it continues to remain popular, more eyes are zoning in on the loopholes in the industry, especially in regards to regulation. As of late, U.S. lawmakers continue to convene, as well as the rest of the world, on how to establish rules and regulations in this volatile subject. Crypto does not fall under any government scope and is hard to trace, which makes it susceptible to money laundering and other illegal acts. Binance, a well-established cryptocurrency exchange platform, and even hired a former IRS criminal investigator to specifically monitor money laundering. China has also strengthened its chokehold on crypto and has ordered the closure of several mining farms in the country as a way to curb money laundering. Regulation is probably one of the biggest overhangs in the crypto industry globally, says Jeffrey Wang, head of Canada-based crypto finance firm Americas at Ambar Groups, who also agreed in unison to this problem. We would very much welcome clear regulation. There are different agencies that may or may not have jurisdiction to oversee everything, and it differs state by state. U.S. Treasury Secretary Janet Yellen and Federal Reserve Chair Jerome Powell have expressed their keen interest in regulating cryptocurrency, and even SEC Chairman Gary Gensler is putting pressure to regulate cryptos. It's no secret that the IRS is on the lookout for investors to know how to report virtual currency while they file their taxes. But before we worry about the rules and regulations for crypto, make sure that you're monitoring your assets first, especially those you've invested in the stock market. That being said, we'll be wrapping up today's video about current news regarding crypto. Don't forget to give us a like and subscribe to our channel before you go. Thanks for watching today's episode, and we'll see you in the next one.